and then we'll start. Everybody is seated. Because we're going to have a talk on how to accelerate the energy transition, the financing trends, and mostly focused on high-income countries, so US, EU. I'm very excited to have you all in the panel because I think it's a great mix of backgrounds. My name is Merei Wagenaar. I'm the Executive Director of UN Global Compact. And we are a multi-stakeholder initiative that is aligned with the United Nations, and our main goal is to accelerate the positive impact of companies. And we do so by giving all kinds of trainings, events, meetups, but also create this safe space to exchange insights and advice. And I think that is, in the time we're living in, it's quite crucial. Before we go into the discussion, I would be very interested to hear a little bit more from you, because we're going to talk about the energy transition. What do we see as kind of trends? What are the challenges we're facing at this moment? What are the opportunities? And before we start, I think it would be good to have a quick run around just to introduce yourself, your name, organization, and what is the key takeaway that you want the audience to leave with. Then we're already done with that part, and you have your key pitch already, and then we go into the discussion. Could I start with you, Greg?
Sure. Good afternoon, everyone. I'm excited to be here. My name is Greg Wasserman. I'm the head of private climate investing for Wellington. Wellington is a very large global asset manager with over $1 trillion in AUM that's invested across public and private markets. I focus on our climate growth strategy, so we're investing in companies solving climate change, either from the mitigation side with reducing carbon, or on the adaptation side with dealing with resilience to extreme weather events that keep happening more and more every single day. Really focused on the growth side, so not taking early tech risk, but investing in companies that are in market with commercially scaled revenues and helping companies grow. And so that's really our focus. And we tend to skew a bit more on the digital side, less on the deep tech side. And I think the key takeaway, which really shapes a lot of our investment approach, is I don't think that you need a ton of new technology development to solve climate change, or at least solve a big piece of climate change. I think it's great that the world is building a lot of these very disruptive deep tech solutions, and people are focused on nuclear fusion reactors and things like that I think are awesome. But I think that if you just take the technology that exists today, that's market ready today and already being deployed, and if you can just focus on getting that out there in the market, better, faster, cheaper, keep driving costs down, keep removing barriers to implementation, and just make it easier for people to adopt these solutions, I think that solves a huge part of the challenge. And so much of our focus is just taking solutions and figuring out how you turbocharge them and looking for interesting layers that just help people deploy faster. So that's really our key takeaway.
Thanks for sharing, and I think it's a great kickoff. Just moving ahead to Remco, maybe you can introduce yourself quickly.
Yeah, good afternoon, everyone. I'm Remco van Montfoort from InvestNL. InvestNL is the National Promotional Institute of the Netherlands. We have around 3 billion assets under management, purely risk capital. We focus on the energy transition, but also the circular economy, deep tech investments, and life sciences and health. And for me, the key takeaway is that the energy transition, it's not a trend, it's a transition. So like Greg already said, we really see things going. It's going to completely renew the way we produce energy, distribute energy, the way we use energy, which also makes it a big investment opportunity. So we're really gonna show you what are the big opportunities in this transition.
Thanks for sharing now. So we have already, the technology is not like the problem at this moment. We have the key technologies, and you say like, well, there are so many investing possibilities at this time. Carolina, can I come to you?
Yeah, I'm Carolina Echecopar, investment manager with Carbon Equity. At Carbon Equity, we're trying to mobilize private capital at scale towards the energy transition. So we work with primarily family offices, individual investors, to allow them access into what we think is generational investment opportunity of climate technology. So we're primarily a fund of funds investor across venture capital, growth equity, and infrastructure, all within the energy transition. And I think my key message won't be so different, but we believe the energy transition is driven by fundamental drivers, so really fundamental economics, and that is apolitical. So maybe that's the message, and I think actually while right now broader investors might be moving away from the sector, we think a lot of the things we talk about that are not climate tech, you don't think are climate tech, so domestic production, security, energy security, are the energy transition. So those are one and the same, and we believe the momentum right now will continue to drive the transition.
Great, thanks so much, Carolina. Ending with you, Alex.
Thank you. Good afternoon, everybody. My name is Alex Ruesch. I'm the Investor Relations Director at Luxcara. Luxcara is a GP, so we're managing, especially via equity funds from institutional investors, which I'm heading the team for, from out of Hamburg, where we are located. And yeah, I agree with my panelists here next to me that the general topic, I think, is clear to everybody. This is why we're here, right? And what we also see in the market is that we started at Luxcara with investing only in renewable energies, especially 15 years ago when we started only in solar and then quickly added the other technologies like wind, etc. But now we have more than 6 different technologies, and we see that the levelized cost of energy for that sector are the lowest compared to all the others. And we also still see that this has not been accepted to everybody or to every investor globally. But in the most countries of the world, our assets are actually at the lowest cost of energy. And it's not just about the generation anymore of this energy, but more about the integration of it. And that is more like our key takeaway for now, at least. I mean, we at Luxcara, we still invest in all these different technologies as long as they are in the clean energy infra sector. And it's on the assets, that's maybe a differentiation for us. We only invest in Europe. So appreciate that it's also about America, but that is not our core market. And we still see a lot of good assets in Europe. So for us, there's no need to go overseas since we are still in the middle of that energy transition. And there's still much capital needed to become that energy independent, where the integration of the generation is much needed.
Yeah, so actually we're around at the beginning where we say like, okay, technology is not the thing we need more than that integration is key at this moment. And before we dive into the topic, I would like to have a little bit of an insight who's in the audience at the moment. So we have these beautiful round things at the table, and maybe you could take it and wave it if you are an asset manager, and you take the orange color for those who are asset managers at the moment. So we see, and then the blue one for the, and the blue one for the investors. Yeah. And if we have then the others, like because we have only 3 colors. So the red, if you put that up, like other type of consultants maybe, other type of, perfect. I think it gives a nice idea. And then diving to connect it to the topic, if we're talking about renewable energies, who has invested in renewable energy? Not privately, but from your firm. Who is currently investing in the energy transition? Actually, I hope to have a lot of, perfect. And then last but not least, who is intending to increase the investment in the near future? Who is just maybe with a color, then it makes it easy with orange or another color to put something in the air. Yeah, not so much. So more or less half, not even half, I think. So I think you do have a challenge this panel to see whether you get more people enthusiastic to invest in more renewables for the near future. But kicking off, would be good to do a little bit of step back and really dive into the market trends, what you see. You started already mentioning it, Greg, in what you see happening in the moment, but maybe you could elaborate a little bit more.
Yeah, if I go stepping back, but maybe even digging a little bit deeper at the same time. One trend that we think's been happening for a while, that I think those of us that sort of spend our lives in the climate space know and believe, but people that don't spend it day to day might not fully understand yet or fully appreciate, is there was a period in the past where climate solutions were worse than whatever the incumbent was, and it required trade-offs. And so if people wanted, green electricity and you wanted solar, you had to pay more money for it. If you wanted a green car, you had to settle for a worse car. If you wanted to invest in green solutions, you had to accept a lower return. And so just historically, there's always been this concept that climate and climate solutions are concessionary. And I think something that's happened, I've been investing in climates for almost 20 years, so going back to 2006. And just what's happened over the years is the solutions have gotten cheaper, and there have also been big step changes and increases in performance of technology. So just ability to connect assets and get, Wi-Fi, Bluetooth, get things connected. Microprocessors have gotten stronger and cheaper, and so the ability to put brains and intelligence in things has gotten better. Software development's obviously proliferated everything, and so devices are getting smarter, and you just have all this improvement of technology out there. And if you wrap that all up in the climate space, you've actually gotten to the point where it's no longer concessionary, but many times the climate solution is actually better. If you look at solar today, it's cheaper than most forms of electricity. It's secure. You can generate it yourself. If you want to build new generation, sometimes you can't even get a gas turbine for years, and so solar is the only thing you can do. Even though it's cheaper, it's also faster. On the car side, I think everyone's probably seen what's happening with electric vehicles, that you might want to buy an EV, not even because you care if it's green, but just it's a better car. They're faster, they handle better, you don't have to go to the gas station. And so there's just been this big technology improvement, and I think the big theme that's underappreciated, and again, this is core to how we think about investing in this space, is these solutions are better now. And so it's not about being concessionary, it's about better tech and better options that are out there for the market, and just driving those and driving adoption and keep driving down that cost curve and up the performance curve. And that's a trend that we really see happening just across every sector of things that are relevant for climate. You're seeing it in renewables, you're seeing it in grid tech and the ability to have, I hate the term smart grid, but just a connected, more flexible grid. You're seeing it in the food ecosystem. You're seeing it in manufacturing supply chains. And it's really just happening quite broadly. And I think that that's probably, for me, the most interesting trend that's happening in the market for people to really know and be aware of.
Yeah. And Alex, you wanted to comment on that one?
Yeah, sorry. Yeah. I fully agree with Greg. And I think I just wanted to add that I fully agree what you just said, that there's, I think, still a bias for a lot of investors, maybe not in this room, obviously, but in general, that they believe if you make an impact investment, however they define it, maybe differently internally, but in principle, a lot of investors still believe if they make an impact investment, the return is sacrificing on that. And that is not true. And especially for the technologies you just touched on, for renewable energies since a long time, speaking for Luxcara, we moved away, for example, from subsidy-based revenue schemes already 10 years ago, more than 10 years ago. Of course, not in all parts of our scope in Europe, but it started, for example, in the Nordics, where we saw that it is really not needed to have any subsidy-based revenue schemes anymore. So the projects have reached the lowest LCOE, and therefore we could secure proper returns. And via now we have done more than 100 projects with 5 funds, with more than 7.5 billion under management. And over all funds, we have double-digit returns, and we have proven that. Depends on the definition. If you define what we do as an impact, all our funds are Article 9, we are EU taxonomy aligned, so most of our investors, especially from the Netherlands, do, then we can prove that it comes with good returns. And also in old economies, kind of in Western Europe.
Yeah, so I think it's a good addition that you see it's paying off. Although in the Netherlands, just a couple of days ago, it was in the news that like the newest wind offshore parks were not, and Eneco and other Dutch investors weren't stepping into it because they had difficulties. So it is still challenging, but you say in general we are through that curve, and it is possible without subsidy, and it's really a good payout. Remco, from InvestNL, I know you do a lot of studies at different technology and also where are investors needed, especially in the Netherlands, because Greg is more a broader vision, but especially for the Netherlands. How do you reflect? What do you see as trends?
Yeah, first of all, we try to look beyond the trends because the example you put on is very nice of the offshore wind. Right now, it's getting less in the money, but we really want to focus on what are the long-term scenario studies. Where is the energy transition going? And we did a research on it last year. You can download it at our website, Financial Insights in Transition. And I got some figures with me because we see that fuel imports are going down. They're right now 27 billion euros a year, and it's going down 7 times over the energy transition till 2050, while energy production is going up 3 times to 13 billion a year. Infrastructure, 3 times up, 14.5 billion a year. Built environment, households, 8 billion a year, 2 times up. And one is very interesting, also I hear that from the other panelists, energy storage and conversion, which is really needed in the Netherlands right now because of the net congestion. It's right now around 0. It's going up to 5 billion a year. And we also see a lot of, in the short term, technological trends in energy storage and conversion. So new battery technologies, improvements in lithium-ion, but also alternative battery solutions, not making use of lithium or other scarce materials, but making use of materials that are overflowing all over the world, new technologies for electrolyzers, and these are already providing new energy investment opportunities right now. So those are really the short-term trends, and we see in the long term, the energy transition really is a bankable proposition.
Yeah. So in the long term, it's bankable, and you see that investments are increasing in all these sectors. Maybe it's a good time to switch to you, Caroline. What are the challenges then? Because I hear a lot of good news and optimistic view to the future. Yeah. What are the challenges?
That's a great question, because we definitely didn't solve climate change yet. So I would say, on the one hand, mobilizing more capital into a sector. I think, as you said, there are still some biases that are outdated by now. So the areas of the energy transition where we have reached price parity or where renewables are the lowest cost form of energy available, there we need to mobilize private capitals at scale. That's what we're trying to do with carbon equity. But we should acknowledge that there are climate technologies or energy transition technologies, however you want to call it, that are not yet in the money. Because the fundamentals are renewables and batteries. That's kind of the source of energy that will electrify everything. But in the applications of that, let's say if you want to electrify industrial processes, really more hard-to-abate processes, that equation is not always in the money. So I think the challenge sometimes can be when you try to marry early-stage, high-risk financing, venture capital financing, with a type of asset that is perhaps not suited to the asset class. So more capital-intensive, longer duration.
And if you make it concrete, what kind of technology are you thinking of that would fit that perspective?
Yeah, so just because I talked about industrial heat, maybe let's go with that. So, for example, when you're trying to make things like cement or steel, or not even going so high heat, but even pulp and paper, things like that, you need to reach a certain temperature. Right now we do that with fossil fuels. There's a possibility to electrify these processes, but that requires advanced technology. For example, companies that are trying to create thermal energy storage type batteries, so not electricity, but thermal energy that uses electricity. Those, when we see the kind of first of a kind or second of a kind projects coming out of those types of companies, the returns are variable, to say the least, probably not what the kind of returns Luxcara is going after. So in those kinds of companies, at the stage they are today, we do need innovative forms of financing, or let's say public-private partnerships is a good example, but also strategic corporate capital to jump in places where the market is not ready to take them.
Yeah. And what kind of innovative finances do you see? Like you say, public-private partnerships or investments. Do you have an example there of how that could work?
Yes, definitely. So industrial heat, for example, one company that we have exposure to is called Rondo Energy. They recently received a package from the European Investment Bank, the EIB, together with Breakthrough Energy Catalyst, which is a catalytic or blended finance and, let's say, concessionary capital from governments and corporates. So they came in together to finance projects of this company. And actually that partnership we've seen a couple of times. I know they funded an e-fuels company as well. So the EIB together with Catalyst is one example.
Yeah, nice.
Yeah, we just had a great panel over here on blended finance, but let me just say that we're really happy at InvestNL. Next year we're going to have a new mandate of 250 million euros, which we can put as the catalytical money for these type of projects. So the type of projects which are bankable in a matter of years, which at the moment just need that little step-up stone to have the complete transaction going. Yeah. And really including private partners to get first-of-a-kind plans and the types of technology we need in energy transition and the circular economy.
Yeah, and there you say, like, well, there are a couple of projects that are just straight on good investments with a turnout which doesn't need that extra push, and some of them are in an area where the technology could use that little bit of a push, and you need to look for other types of finance to get that going. Good.
Yeah, part of what I think is exciting about how the market's evolved is how the segmentation of different types of financing has really gotten a lot more nuanced, and you can now better match sources of capital with the type of investments that match, their target returns and their target timeframes. Because the space hasn't always been like that. If I think back, again, when I first started investing in climate, there were just some venture funds that did kind of green investing, and you had venture funds funding these big asset-intensive kind of CapEx type plants, and that's a lot of what blew up Clean Tech 1.0, and there was not that much differentiation where people could mix and match the right sources of capital. And some of the examples that you hear everyone talking about now, now you have infrastructure funds, and so if someone wants to invest in the infrastructure, they can do that and get a real asset return. And even within that, you can be, you can be the debt, you can be the equity, you can match the timeframes you're looking for, and even you mentioned, Breakthrough Catalyst, right? Either corporate capital or, some of what like Bill Gates has done on the transformative side. They just have a much different time horizon and much different return requirements than a typical investment fund. And so they can match their capital in places where it wouldn't fit an investment fund from a time horizon perspective. But all the segmentation, I think, has really just opened up the market for, capital to really be able to play anywhere and fit, find where it fits best, which I think is exciting for, getting things financed.
Yeah, I totally agree that we're in an exciting time now. And I have a background working with government like 10 years ago, 15 years ago, and then it was all about subsidies and how to get the market going. Well, I mean, almost 20 years ago. But it really was about subsidies, and now you see the switch to capital-intensive markets, and it's just progressing. And maybe that's a good, heading your way, Alex, to say, okay, the opportunities that are there. We talked already about it, but maybe you can make like a short, brief assessment. Okay, what are the key opportunities you see at the moment? before we turn to the
Yeah, I mean, there are some key drivers, right, which we observe at least in our sector or for our market, which is Europe. So first, for example, is the Trump, basically, so that a lot of investors who want or have already heavily invested, for example, in Europe, saw them also as very developed market, actually, where returns are coming down for the traditional renewable energies, etc., which were then also investing or starting to invest in parallel into that integrational assets, as I tried to explain. So hence storage, EV charging, green hydrogen, and now also wanted to do more, for example, in offshore wind in the US, are now coming back, actually, and not just US investors, especially from the West and East Coast, but also other investors from UK, for example, who just told us that they stopped their US program and are now looking for other markets. And there are not that many developed markets, so that is one shift, again, short term at least, which of course open up opportunity again, because they made up their minds now again and maybe don't want to invest in another, I don't know, traditional renewable energy asset like, I don't know, solar in Germany, which is for them boring. And then you see, on the other hand, also coming back to Europe, a lot of trends like coming from Germany, there's a new regulation in place that institutional investors, or a lot of institutional investors, pension funds especially, or German Versorgungswerke, are now allowed to deploy more money in a segregated, specialized infrastructure bucket. And in general, the risk capital, which can be invested in non-liquid, illiquid assets like ours, private markets, real assets, have been increased. So that, of course, helps in general and opens up, again, new opportunities for investors which have already been investing. And usually they've made good experience, hopefully. At least they are experienced in our sector, and they want to do more, or can do more, if they have money to invest. But also, as we are in the Netherlands, as you also touched on it, just 2 days ago, I think, there was an article in the Financial Times from the chief executive from ABG, saying with the new Dutch regulation, there's also maybe more flexibility to invest, maybe not just in our double-digit returning opportunities or offerings, but also in the more risky in a positive way, asset classes, technologies, which they have been reluctant a bit because they were not allowed, or due to their portfolio composition, had to invest more in fixed income and government bonds, stuff like that, investments, and are now hopefully soon more free. I mean, of course, it's a long process, and most of them still have just started with it or in the middle of it, and it has to be implemented over the next, I would say, from what I hear, 3, 4, 5 years. But there will be more opportunities raising out of that. And these are just 2 examples, right? So that's the other part. And one third one maybe is really a new dynamic, at least we see newly in Germany as well, sticking to these countries maybe, but also in the Netherlands, also some years ago, that we are gone really from the subsidy-based, for example, as we also touched on offshore wind auctions, and especially in the Netherlands, it's nothing new, that it's really also about qualitative aspects. So that it's really about if you want to invest in offshore wind, win an auction, actually, from the authority, it is really written that you really have to come up with a proper plan. Who's your off-taker? How do you want to stabilize the grid? What does the consumption profile look like? So in short, the consumption and the generation has to come together. And you really, as a producer like us of green power, and we are one of the biggest of unsubsidized green power, really has to make up its mind about, okay, how does the offtake profile look like? And that becomes more and more important to then come to that returns also and get even better offtake prices, get bigger offtake volumes, and actually, get the chance to build it actually, right? So otherwise, if you don't really care about it, and this is very important for us also that we already have invested in such assets, and we call it downstream, also in green hydrogen production facilities already under construction, already having HPAs, so hydrogen purchase agreement, long-term in place. That helps us very much to also still invest more in generational assets. And last point, Germany has also adapted that, luckily. And not entirely, it's just had 2 auctions for these qualitative bids. But I think this is where it should go to, right? So that we are stepping away from that subsidy-based and not just integration, I don't care about who's my off-taker world.
Yeah. So before we go to the audience, so start already thinking if you have a question to ask the panelists later on. First, Remco.
Yeah,
you
asked about an opportunity. There's a big opportunity right now because we're already throwing away energy during the daytime. You know, the daytime when there's a lot of wind, a lot of sun, midday, there's not a lot of offtake of electricity. You have to shut it down. If you have a battery or electrolyzer, you can produce for free. And you see the volatility of the prices in the day-to-day market. They used to be quite steady, and they're going up and down day to day, really high. And we all know volatility is also a way to make money. So there's a great opportunity there in getting the net balanced to make some money.
Yeah. So a nice addition to the like we're having already quite a list of the opportunities, whether it's ad investment out of the US back in Europe, whether it's the voluntary the price fluctuations, whether it's also the technology development, the way of processing that no subsidies are needed at this moment. So I see quite a wide field of possibilities. Before I go to the audience, because I can imagine that we have quite some questions for the panelists, I think it would be nice to see, are there still the same people putting their hand up when we say, are you going to invest in the energy transition in the near future? Are there any changes? Could you please raise your hand again if you say like, okay, I'm going to invest in the near future in renewable energy? Could you put that up again, your cards? I think it's more or less the same. Maybe you won some over there. I think you're doing good. Well, I think there's some changes.
Oh, that's good.
But I think it's good to have that. And I think I'll first take some questions and then we'll do around like the key takeaways you want to share. But are there any questions? I'm just looking around. Oh, in the back table.
Me? Hi, Bruno Bessic from NN Group. One of the biggest bottlenecks in the accelerating energy transition is the transmission system operators and distribution system operators, and that's going to be the utilities basically are the next big thing, what we need to finance and how they are going to accept all this huge energy that we are generating, renewable energy that we are generating. So what are your thoughts on how to actually accelerate them? Because that's going to be the next thing.
Yeah. Do you have somebody in the panel particularly that you want to ask it to? Otherwise, I'm just going to ask them
panel.
Oh, across the panel.
Yeah, I can jump in. Transmission is definitely a massive bottleneck, and it has been for a while. I think there's a lot of different ways that you can solve that. Some of what we're focused on, at least from our perspective. One is there's interesting technology on transmission conductors, and so I don't want to push our own book, but we have an investment in a company that just lets you replace the wires with a different type of wire, and you can double or triple the capacity. And so it's just a simple way of solving capacity without having to build new lines. As the American in the room, always getting asked about Trump and Trump's impacts, one positive that I possibly see from that is that Trump is talking about, cutting red tape and reducing bureaucracy, relaxing permitting restrictions and letting people build easier. And so that could be great for transmission because at least in the US, it takes forever and permitting is a huge piece of that. We also see just a lot of interesting tech coming up that lets you either design transmission more efficiently with smarter software, software that better manages the transmission queue, better modeling of the grid and where you really need software. And then, Alex talked a lot about integration of storage, but you could also solve some of the transmission challenges without having to build transmission, but put storage at the right places in the grid and deploy it at the right times and kind of better utilize the system we have. And so it's definitely a huge bottleneck, but I think there's a lot of just tons of interesting solutions coming up that are solving it from a lot of different angles.
Yeah, I think it's pretty complete. But Alex,
Yeah,
if you
just wanted to add, I fully agree. That would be one of my 2 points, what Greg just say. So we already know, at least most of the parts on continental Europe, where we have this major bottlenecks, and there, if we then, at least for short terms, deploy there specifically batteries, and we can do that via different strategies. We, for example, just toll them then for to the big utilities if they don't want to do it themselves on balance. That could be one solution, or another one. For example, we have not talked about the Nordics, but the Nordics have a quite good grid actually, and which is why, at least partially, because you can also make the renewable energy producers build the grid. So, for example, in some countries it's not allowed, like in Germany, but in certain other areas, like in some countries in the Nordics, you have to build the grid, or at least parts of the grid, or a substation, etc., a transformer, and then have to operate it yourself. Well, sometimes also you're not allowed to do that, and then you have to hand it over to the operator, to the regulated operator. So there are different solutions already in place and opportunities. It just has to be more accelerated, actually.
Yeah. And I think it's a very relevant question. I think looking at the debate about renewable energy, it's like all getting back to the grid connection and how to evolve it. And good to hear that there are both technical solutions coming up and companies to invest in, and the other one is more more using how to make it compatible, and not that it's not only technology in solving the issue. Other questions? I see one to the right.
Yeah, hello, this is Hank Elder from Neuberger Berman. A question about, you didn't really touch on geopolitical, piece of this and energy security. So for those, on the panel, European members of the panel, how does that factor into the demand and also the future growth?
Yeah. Well, Alex, maybe for you
yeah, of course
to
I can.
start with?
But please also jump in. Yeah, it's a major issue, right? I mean, especially in Europe, energy independence is super key. It should have been before the war in Ukraine and Russia started, but at least since shortly before that, we saw that already in the prices, right? In the energy prices and all commodity prices, and especially afterwards as well. And since then, quite big volatility in the market. So we saw the times when we then have too much power in the grid. We also saw the times when we have no wind and no solar, and then again crazy prices, at least for short terms, but also could take some days as well. So the energy security, hence energy independence, I think is the key topic when it comes to our sector under the energy transition framework, so to say. And I think how we have to tackle it is what we just discussed, basically, and that it's not just one solution. It needs more generation, it needs more grid stability, it needs a lot of more storage, and there is, I think, also not just one solution for technology and storage. So batteries, even if you were talking about hundreds of megawatts, can't solve that issue if you have too much power in the market. Then we're talking even hundreds of megawatts can just take a few hours maybe. Yeah. So, but we need something for days and weeks, especially when the wind is not blowing, sun is not shining. We need solutions for that, and then we need also green hydrogen, etc., hydro, all the different technologies. So it's a multi-solution, I would say. Yeah.
Well, I think with the eye on time, we're going to a closure. I see Greg, you wanted to make a closing remark to...
I was going to throw it, it's a little bit off-piste because it's not directly related to energy transition per se, but on the geopolitical point, I think something people really need to be aware of is how intertwined climate change generally is with geopolitics. So energy security is a huge piece of it, as we learned from what happened in Ukraine and with European supplies and energy prices and all that. But if you look at climate change more broadly and you think about the impacts of climate change, they'll be most strongly felt kind of around the equator for obvious reasons, given that's where heat will happen the most. And if you look at the geopolitics layer over that, the areas around the equator tend to be some of the most geopolitically unstable around the world. And so if we don't solve climate change and all these solutions and get them out there, I think the world has a huge geopolitical problem where the places that will be most impacted and that will have most climate migration are also some of the most unstable. And so it's a very interesting kind of geopolitical dynamic, I think, that will play out over the next couple decades.
Yeah. Well, I think with that remark, we came from what are the challenges and how can we accelerate the energy transition from technology, what's there already, and how bankable are the solutions already, from the possibility and looking at the possibilities, and now actually we're making the turn to, and it's really needed as well because it's so intertwined, the times we're living in, and the geopolitical setting we're living in now. Well, I think we made a whole round. Thanks so much for the panel, and we're giving the floor to the next panelist. Thank you so much.
Thank you.